Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. Okay, so looking at our market today, you can see that we're slightly lower, okay, by 17 points as I speak. It's roughly 2 o'clock in the afternoon, so a couple more hours to go, approximately half an hour before the RBA announcement. So basically at this stage, it's been a fairly whippy day. We tried to sell off to test into that 71 level, but we have seen a little bit of buying push us back up. It's a bit of a nothing day. The US markets were closed overnight for a public holiday, so I expected this today anyway. At this stage, though, overall, we are still tracking on an uptrend. You can see that each move higher is running out of momentum in this uptrend, guys. Okay, so just pointing that out. Any moves higher, obviously, are going to probably be met with a similar sort of low momentum. So if we kick through 72, I suspect we'll pause at 73 and go sideways for a month and then kick higher. You know what I mean? So something like that. Not expecting those big moves like where we went from 68 to 71 all at once. Okay, so we're sort of expecting that kick up sideways, that type of momentum moving forward. In the short term here, though, we're looking a little bit overdone. Pullback is on the table. Whether we pull back all the way down to 7,000 or not is definitely debatable at this stage, especially with no leads from the US. It's pretty hard to pick. So really, for me, all eyes on the 7,100 level. If we hold there, I think we'll whip sideways between 71 and 72 for a little while. And then if the US markets can kick into all-time highs, then we'll also see us follow. If you have a look today, we're seeing a bit of weakness around the banks, a little bit of strength around energy and materials, but most other sectors are a little bit in the red. Utilities are slightly higher, and staples are slightly higher. Nothing to really brag about, but sort of the highlight at the moment, in particular today, was Fortescue, which was up about 4% at one stage, following iron ore higher. Now, coming across the S&P 500, you can see here, guys, basically there is resistance up here. That is the all-time high level. We're very close to testing that level, and really until that level breaks, it's hard to really say. I suspect we're going to continue to see a lot of whippiness and a lot of sideways movement in this tight band through here, between 42 and just above 41. Until we see enough of a catalyst to push us through. And there's plenty to come. There's plenty of information coming up that could suggest that we will break higher, but we're just not quite there yet. Nasdaq, though, we could see a little bit of a push back up near the all-time high here. There's still a little bit of room left, another, say, 2.5% before we get to those levels. But nonetheless, yeah, pretty much more of the same. Nice big move up recently. Momentum's drying out. Everyone's sitting here questioning whether we're going to break higher or pull back. Only time's going to tell. So just to some important talking points at this stage, iron ore's staged a bit of a rebound. So that got as low as about 185 again US a ton, rebounding just below 200 US a ton. The iron ore futures have been quite whippy of recent, but now showing a bit of a break back to the upside again after testing the long-term uptrend. So all the efforts from China in their commentary to pull it all back, it didn't last long, okay? There's still obviously huge demand for iron ore at the moment, and with only the major suppliers coming from Australia taking on that load, prices just keep going up, guys, and that's what I'm going to put it to. There's a huge demand. Vale needs to bring their supply back to the marketplace in a big way before you see any major pullback. I suspect demand for the next year or so is going to remain very strong in this space, especially as many countries around the world will turn to infrastructure spending to rebound their economies after the COVID slowdown. So, look, demand for commodities in general are expected to be very high over the next couple of years. Copper as well has taken a huge run, and just base metals in general have been quite desirable in the short term, and breaking close to a lot of all-time highs. So, really at this stage, I haven't seen a more favourable environment for the material stocks, BHP, Rio, Fortescue. In particular, since 2011. Okay, so they're in a huge favourable position. Their commodities are trading high. In particular, their new technology has brought the cost of producing iron ore very low. So really, I can't see a better environment for them. So keep an eye on those material stocks. In particular, BHP is my favourite right now, even though it's not the cheapest of the three that I mentioned before, purely because they've got a little bit more diversification and they've heavily into iron ore and copper. Also, crude has rebounded quite strongly as well for them. So I think they're very well positioned for a great report come August. Okay, so coming across, China tensions are the big thing that's holding that sector back. So you need to bring that into consideration in the short to medium term. I think a lot of people are worried about China tensions with Australia, China tensions with the US and the Western nations. So, look, that could hold investors back from buying into those miners, right? And until I think the mood eases and people focus more on the numbers rather than the politics, you could still continue to see the miners run cheap, okay? For example, Fortescue is the cheaper of the miners, of the larger miners at the moment, purely because it's only an iron ore play. Okay, it is one to watch, especially as these China tensions play out. If people start focusing on raw numbers coming into August, you're going to have another huge dividend. You got a stock that's extremely cheap, that's got a great growth prospect for it at the moment. The question is future growth around China. If China continues to try and find another source of iron ore outside of Australia, that's your big question, right? It's going to take years to accomplish. So it is definitely an interesting debate. But at this point, August is going to be an awesome report with a very cheap stock with a huge dividend coming. I suspect there's some more buying on the horizon. So we all know the big thing that's holding up markets at the moment is stimulus. Okay, so between physical and monetary stimulus in the US, there's no signs of any backing down. Okay, so the Fed's going to continue bond buying. We'll have to really keep a sharp eye on the Fed over the next 2 to 3 weeks. We've got a few of the Fed members talking later this week. Mid-June's the next Fed monetary policy meeting. Some people are expecting mid-year that they'll start tapering bonds. Bond buying, I don't suspect it could. I don't know. I think it's 50-50. I'd probably be more leaning towards not. Until they bring COVID completely under control, I don't think they'll taper their bond buying. And as for interest rates, I actually don't think they're going to go up for a while. And I guess it's all going to come down to inflation. I do suspect short-term inflation readings to be very high, but I don't suspect that will be maintained in the long run. Therefore, any hyperinflation that we see is only temporary as a rebound from such low levels that we saw last year. The deflationary period that we had through COVID. Okay, we need to see that rebound a bit. So look, physical stimulus as well is on the horizon. We're expecting more infrastructure spending to come from Biden. I know they're negotiating that at the moment. We don't have a strict timeline or anything like that on it. So I guess it's just wait and see. So that's all looking pretty solid at this stage. I think that's what's going to really support markets for the rest of this year. Melbourne restrictions, obviously we saw 9 new cases yesterday. We saw 3 cases today, which is very promising that we could exit this lockdown fairly quickly. But look, you will find out more Thursday. If cases start jumping dramatically again, I suspect it will start affecting some of the travel stocks like Webjet, Flight Centre and the rest. So just keep an eye on that space, guys. Keep an eye on those daily cases as this plays out. Could weaken the markets off a little bit if that does blow out again. I suspect not. Snap lockdowns tend to work. So look, that's where we're at the moment, guys. Not much else to really say. Let's see how the US markets react this week to being back up at all-time highs. Everyone's going to be questioning whether we're going to be able to push into all-time highs again at this stage without a catalyst, really, because there's no real big catalyst going on right now until we see that next big infrastructure spending come from the US. So is there enough optimism in the market right now to push us higher? That's the question mark, guys. So let's just wait, watch your resistance levels, and see whether they can play out or not. All right, so not much else to say. Pretty boring week so far. So thanks for listening in. Take care, and bye for now.